Well, good afternoon, and thank you for joining us for this CEDA live stream. For those of you who don't know me, my name is Melinda Cilento, and I am the Chief Executive Officer of the Committee for Economic Development of Australia. Welcome to today's live stream, COVID-19, Plotting Our Economic Recovery. I think most people will be aware that we at CEDA have pivoted to these live stream events in response to the fact that we can't hold face-to-face events at the moment. It's been a new experience for us, and I think a really positive one. I just wanted to thank everyone for your support and participation, in enabling us to engage with you on topics that remain very important, and to be able to continue to provide you with really interesting insights and perspectives. Before we start on today's topic and conversation, I did, of course, want to acknowledge that we are meeting on Aboriginal land, wherever we are, unless you happen to be watching us from the Torres Strait. And I actually just wanted to pay my respects to Elders past, present and future. For me, I'm on the land of the Wurundjeri here in Melbourne. But I also just wanted to take the opportunity to say that as we start thinking about economic recovery and what that might look like, I hope we don't lose sight of the fact that thinking about how we might deliver better policy and outcomes for Aboriginal and Torres Strait Islander people and communities remains as important as ever, and perhaps we might have an opportunity to do that better and to promote reconciliation and achieve better outcomes in that space, as well as in terms of our economy more broadly. Today's topic is, I think, a really timely one. It's pretty clear that people's attention is starting to pivot from the health crisis and the health response and really starting to focus very sharply on what the economic impact is and what the appropriate economic response is and the policy response. So I think a really timely conversation for us to be having. So timely, in fact, that the Treasurer is also speaking on this topic right now. I've got my team keeping an eye on what he has to say, and if there's something that we think we need to bring into this conversation, we'll do that as we go along. While we're doing this live stream event, our audience, of course, still has the opportunity to participate in the event themselves. If you would like to ask a question, you can do that by clicking the link that's below the video on your screen and just add your question. And when we get to the Q&A, we'll be able to take that question and get our panellists to respond to your question. In terms of the format for today, we'll have about 25 minutes of conversation and discussion with myself and the panellists, and then we will move to Q&A. So please do send your questions in. I think it's going to be a pretty engaging conversation, and if you don't send questions in, the three of us might just talk all afternoon. Now, on that note, let me introduce today's speakers. We have with us Greg Smith, who is the former chair of the Commonwealth Grants Commission, and of course is a member of CEDA's Committee on Economic Policy. Thank you for joining us, Greg. And we have Miranda Stewart, who is a professor with the University of Melbourne and the University of Melbourne's Tax and Transfer Policy Institute. Miranda, thank you for being with us as well.
Thanks for having me.
Now, let's start with you, Greg. I think a couple of weeks ago, you wrote a paper for CEDA and an opinion piece that was published in the AFR calling for an economic statement from the government to sort of map out their views on where the economy was and the key issues. Why do you think it's so important that we're hearing from the government now, and why is that sort of statement so important for us now?
Okay, well, thanks very much. We, of course, have been fighting a war, and the war has completely dominated our attention. But every war has unintended consequences, as all the best historians say. And the unintended consequences eventually can become more important than the original purpose of the war. And in our case, the unintended consequences of our response to the pandemic crisis are building up around us very, very rapidly. We need to shift our attention to addressing these very much, because they will have long-lasting impacts, particularly on our young people, but across the entire community. Social impacts, economic impacts, and ultimately political impacts. So that's why I believe that we need to make the extra effort of putting back in play our economic processes, and to ensure that we pay attention to these things. There's really three big things in my mind that we need to get the official view. The first is the basic profile of this crisis. I believe the profile is extremely unusual. It's nothing like the GFC, and we need to have an official understanding explaining it to all of us what that profile is and will be. Secondly, there's a mismatch in the timing in front of us. The budget is set down for October, but the crisis response, the economic crisis response, is set down to expire in September. That is to say, everything we've announced expires before the budget. The problem then is we have a gap. And that's why I called for an economic statement to start the process of being prepared for that gap. Because if we in fact respond to the gap, we're effectively having a prior budget, a budget before the budget. And so it's really important to realise that we've got to get onto this job, because we're getting some timing mismatches. There's a few other elements to that which we might come to later today. And the final one, of course, is that uncertainty itself has a very high potential economic cost. So we really need the government to do everything it can to reduce uncertainty. And just as every single day we've been getting briefings on the actual pandemic response and the data underneath it and the modelling and everything else, we've got that every day. But we've had only sporadic commentary on the economic crisis which is unfolding, leaving huge uncertainty risks in our economy. So they're my three big reasons for getting on with the economic agenda now.
Yeah, thanks, Greg. I mean, I think it's been really interesting to see how quickly the conversation in Australia has started to shift. And I think, one of the things that's been really a feature of this crisis has just been the pace at which things are changing and how quickly we're being called on to respond to new information. And it has created, I think, a really heightened environment of uncertainty, and having a statement I can see would sort of help to anchor that uncertainty. Miranda, how do you feel about this call, the need for an economic statement? What do you think is important about that sort of statement? What would you like to see it contain? And from your perspective, what are the critical pieces of information that we need to start filling the gaps in on?
Thanks, Melinda. Well, of course, we would have had the budget usually second Tuesday in May for decades now, with only a few minor changes. I think decades ago the budget used to be in August, but moved back to May. So that postponement of the budget, I think, was the right decision in order to facilitate that immediate emergency response. But that emergency response has, although there is legislation underpinning it, both the social security side and the tax side and other regulation, mostly it's been done by really dramatically increasing the executive power, the power of the Treasurer, the power of the Minister for Social Security to make those changes, possibly to extend it to the end of the year. In respect of Greg's point, there is that scope, I think, in the JobKeeper package, for example. But of course, we don't want to govern by executive fiat, although it gives us that rapid response. And so what I would like to see to kind of ensure up this sort of legitimate fiscal decision-making process that we have, that we call budgeting, is to get back on track and to see that those regular, stable statements and policies. So we need the economic indicators and assumptions that are going to underpin the fiscal estimates in this this statement coming up soon. It would be good to see some information of the government about the government's risk assessments. You know, usually we would see that in MyEFA or in the budget. There would be in the strategic statement an estimate of the global risks that are facing Australia. So it would be good to see some narrative about that. And also perhaps to see some steps towards what will be the next step of the fiscal policy response. Although I would like to see that more developed, and so I would be looking to have that in the budget itself, and to have a really substantial section that thinks seriously about the response for the next couple of years and then potentially for longer.
Yeah, I think that's I think the points that you made, Miranda, around the way in which decisions need to be made during a crisis, and that sort of executive authority or control, you know, I think people accept that and understand that in a crisis environment and crisis circumstance. But it is a really interesting challenge, I think, in terms of how you then segue back to something that looks a little bit more normal, particularly when you still remain in the throes of the crisis, or in this case, as we move from the health crisis to the economic crisis. So, you know, I think from my perspective, I think that's why it's really important that we start to hear from the government how they're thinking about it and how they're planning to manage their way through the next iterations of the crisis, which perhaps then sort of leads to a bit of a segue around how we're thinking about the shape of this crisis. Greg, you mentioned that this is very different from the global financial crisis, and we're seeing that sort of commentary, but it does mean, I think, that people are really struggling to try to understand what the shape of this recovery or what the shape of the next 12 months even looks like. There's still that uncertainty around the health, you know, how we evolve from the health crisis. But you know, how are you seeing the expectations around what the next 12 months looks like, and how are you thinking about that from a policy perspective?
Okay, well, there's been quite a lot of attempt to estimate or to predict what's going on. In my view, this is probably a bit of a mistake, that in fact what we have to understand is that we can't predict entirely what's going on, and that, in other words, we face what various writers have been referring to as radical uncertainty. So the issue that arises when you're in that situation is not so much to accurately predict what will happen or the precise timing at which it will happen, but to anticipate the possibilities, work out what you do know and what you don't know, and then establish a set of rules which enable people to know how you're going to behave as you face these things as they unfold. Now, why is that particularly important on this occasion? On this occasion, we have a pandemic. It's acting globally. There's really nowhere in the world where this thing's not acting, but it's acting quite differently in each and every place. The impact, because we're part of a global economy, is going to come at us not just from what we're doing, but from what each and every other country is doing over the next year, 2 years, possibly longer. We also have no idea at the moment how this particular virus is going to travel. I don't mean across borders. I mean, is it going to mutate? Is it going to peter out? Is there going to be a vaccine or other treatment? All of these things are entirely uncertain. So we have to assume that the impact on us, a bit like the GFC eventually, will be coming as much from international problems as they will be coming from our own circumstances. And so that creates the probability that we will need fiscal and monetary readiness, not just until we bounce back in a few weeks' time from our shutdown of our own, but we may need to be ready for all types of shocks coming through the world economy to us, through the world's financial system, to us, and through our own developments. So that's what I think is the difference. With the GFC, we had basically a demand-driven problem that came out of a financial crisis. It then played out and we could use traditional instruments to deal with it. But with this one, we've got both supply side impacts, a bit more like a war or a natural disaster, operating randomly and unpredictably at the same time as these demand risks and these confidence risks. So we've got this interactive process. I think we'll go through a period where we're probably now coming out of the first period, which is the actual crisis, the first level of crisis. We then go into a period where demand is well short of supply, of supply potential. That's what we would call a classic Keynesian period, where there's a shortfall of demand, and that requires a different type of policy response, flexible but different. And then finally, we'll come to another third stage, which is where the damage which has been done to our economic potential, our actual supply capacity, needs to be addressed, probably by reforms. So these three stages are what we now face. And we need the government, amongst many others, to clarify how they see these stages and this unfolding structure and what they expect to be the strategy for those particular periods.
Yeah, I think that's actually really helpful, Greg, in terms of trying to break this down into the different sorts of responses that we're going to need to see. And I think, you know, when you look at the papers now, it seems in a way that, I mean, perhaps that people are sort of assuming that the second phase that you've got there, the sort of Keynesian macro stimulus response, and then jumping immediately to the sort of that sort of microeconomic supply side potential reform agenda, if you like, and that's what we're starting to see in the conversation already. Miranda, what's your thinking about? I know it's probably not your area of expertise, but I'm sure, like everyone else, you're having a bit of a look at what people are saying around V-shaped recovery or ticks or whatever you want to just, you know, the alphabet soup of how we might fare. Any thoughts on that?
I'll probably pin my flag to the radical uncertainty mask that Greg's referred to. Look, I think Australians, and this goes to the sort of tax and transfer and other policies that we're going to have to be thinking about going forward. We should remember, to be honest, how lucky we are. I mean, we're not still carrying out the bodies, except for the unfortunate few. And I mean, there is a risk that will increase, of course, and so that risk, I think, is still very live. But you know, a healthy economy really does depend on there being healthy people, and I do also, it's not so much a trade-off, you know, lives versus the economy. You kind of can't have the one without the other. If you go back a few hundred years, people said about Great Britain that one of the reasons Britain was positioned for the Industrial Revolution a few hundred years ago was that they had managed to eliminate famine out of the economy. And they had done that through a combination of distributional rules, food distribution in local communities and so on. They hadn't had a famine for at least a couple of hundred years before the Industrial Revolution. So if we think about the health of the population that way, we need to sort of think, how can we actually leverage that health? We have that health here in Australia because of our response to the crisis, and can we leverage that for our future economic response?
Yeah, I think I would agree too around the level of uncertainty, and that's going to have to sit first and foremost. I mean, I think it's fascinating that we are seeing people, there seems to be a coalescing around the outlook for next year, and there's some simple assumptions being made, one of which seems to be that we've kind of dealt with the health crisis and it goes away. Or it remains manageable. And so I think there's a lot of uncertainty just about that very first sort of assumption. Greg, we'll have an economic policy statement. The Treasurer has, of course, responded to your call for one. And so we'll see that. So tick, well done. But then we're, you know, and they'll start laying the frameworks, hopefully, for what we can expect in the future. But then we'll have the budget later in the year. And I'm interested, there is such a strong narrative in Australia around how we think, how we have conversations around the budget and fiscal policy. And it's usually anchored in expenditure to GDP, revenue to GDP targets, and this sort of mantra of economic credibility, which is about returning to surplus, the sort of balance on average over the cycle. Is that narrative the narrative for the future as well? Is it relevant? What do we hang our hat on there?
Okay, well, I think this is really now the nub of the issue. This is the central question that we're building to with this discussion today. So what we've got is a Charter of Budget Honesty, which requires there to be a medium-term fiscal framework. And we've had this in Australia now since the 1990s. This is a perfectly legitimate thing to have. It's a very good idea because it's all part of this process, as I say, of having clarity about the government's policies and strategies so that people know as best as can be known how people are going to behave and what sort of economic policies we're going to face. So that's good. But when you read the last version of the medium-term economic framework, and associated with that a thing called a budget repair strategy, that was written last year. And last year is gone. The world in which that was written no longer exists, or at least that's my view, that it really has gone. I think there are actually now out there two views. There's an optimistic view that it's only gone for a few months and that we're just bridging back to it again. We've gone off the rails briefly, but we'll be right back before Christmas. And then there's another view, mine, I'm afraid, which is that no, this is actually going to be a pretty deep, long and difficult set of rolling shocks to the Australian economy. And we've just basically spent maybe $200 billion transferring net wealth from the public sector to both the business community and the household sector. On my rough guessing, 2/3 of it to the business sector, 1/3 to the household sector. And that, I suspect, won't be the end of it by any means. So those of us who think we're looking at a very large transfer think that to be saying like we do in the current, last year's statement, that we will aim for a certain share of GDP of revenues or a certain share of GDP of outlays, a certain, a quick return to budget surplus, these types of things. I'm not saying that they have to be removed. The government has a range of choices here. What I'm saying is, though, that we're going to have to be a little bit more realistic in what we're saying if we're going to be saying anything useful for the next 2, 3, 4, 5 years, because I don't think we can return to those sort of concepts of debt and deficit in that time frame. What was a medium-term framework, I regret, is now a long-term framework. And we need to know whether the government agrees with that or whether they are actually going to try to revert to that sort of a framework quickly. That would be to imply that the second stage that I'm talking about doesn't require different policies than the longer term phase, the third stage. That would worry me. That's my own view. My own view is that we're going to have to focus on macroeconomic repair first before we focus on budget repair. That's my view. But we need to hear from the government. That's why I'm calling for a statement from them.
Yeah, I think it's I think it's a real challenge. I think about how we're going to change thinking and recondition expectations, because those messages have been so strong for so long. But we were talking before this call, Greg, around previous recessions, and I think you remarked that when you go back and have a look at what happened in the early 90s, the quantum of impact then compared to what we've seen now is just an order of magnitude different. And it just, to me, suggests that the sort of typical trajectories that we're so used to talking about have literally been blown out of the water. And if you don't start explaining how you're going to join those different sort of realities, then that uncertainty adds to the uncertainty that's already there and becomes quite problematic. Miranda, at the risk of oversimplifying and being a bit glib about this, the tax reform agenda and conversation also seems to be one that for the last little while has followed a particular rhythm and pattern. And so I'm interested in what you think this fiscal reset means for how we think about tax and what role tax reform might play down the track, and whether it's tax as a macroeconomic stimulus lever and then the structural tax piece. How are you thinking about this now, given that the world has literally turned upside down in terms of what might be affordable?
Just back on the budget metrics, I think it's useful to remember that the Charter of Budget Honesty actually frames the decision-making of the government on fiscal policy as requiring prudence. Doesn't tell us what that word means. There are sort of public accounting norms about what prudence means. Prudence, I think, has been interpreted, and this is what you're talking about, for many years as meaning pathway to surplus, very, very low deficits, very, very tight constraints on government spending. Although we had a stimulus immediately after the GFC, and we had some tax cuts as well as the grant that happened 10 years ago. Since then, we've had a pretty much an austerity approach in the social security portfolio, at least, and in terms of government costs. And we've had that cap of 23.9% tax to GDP reiterated by the government, and in fact for a while by the opposition as well. What that number means is I've never understood. So I guess we could reinterpret prudence. I would think prudence means in the new world, even if the risk assessments are that new world is actually not that different, and I wouldn't be the one to predict, prudence means resetting our policy goals in that new world. And if we were to take a more macro approach, we want to think more broadly about the effect of the tax system and the social security system together. I do think you have to think about the cash transfer side across the population. How is that affecting them? Because that's the macro. It's not everyone individually responding. It's across the population. How are we encouraging investment, or how are we supporting their consumption or their demand? So what does it mean for tax reform? We do want to try to keep the basic taxes that we currently have that are generally pretty good operating. That's their main function. Delivering stable revenues. We're going to see a significant decline in those revenues in the short term at the federal level, in personal income tax. Apparently iron ore prices are still looking good, so you never know, corporate income tax might be all right, but I think bank profits might be down a bit. So we need to shore up those bases, and we can probably do that with a little bit of incremental reform to broaden those bases. At the state level, they're going to see we might come on to this a little later, they're going to see a really big hit to their balance sheet, or their fiscal statement, sorry. Tax revenues are going to be down a lot, and maybe there's room there to encourage to do some tax reform to encourage economic stimulus. But the thing I would say there is the federal government has to lead that reform. Like, the government has to lead it, and maybe prudence going forward, we're going to see that level of leadership on fiscal policy decision making that I think we really haven't seen that much of to date.
It's an interesting question, and I will come. I think it's a good time to sort of talk about the role of the federal government and state governments. I do think it's interesting. I mentioned earlier just the pace at which things have shifted, and I'm just going to pause for a minute and reflect back that in the early stages of this crisis, the message from the government was that actually they weren't going to do what happened during the GFC, which was this very big fiscal response. And then the very first package announced by the government was actually substantially more than people were expecting. So they went further straight out of the gate than people were expecting. But there was still commentary around, we're not going to throw money from helicopters, et cetera, et cetera. And then that just pivoted completely. So I feel like so far the government sort of got this message around the need to be to err on the side of stimulus and really hitting the economy with everything it can from a fiscal position. But we'll see how that unfolds. I think the position of the states is an interesting one. And Greg, I'll ask your views on this. I know you've got strong views on it around, we've seen state revenues plummet. We've seen state spending, particularly in public health, skyrocket. Who do you think should bear the burden of that? How can states wear that debt burden, and how might we coordinate that and look to the federal government to play a role in managing all of that?
Well, look, I won't take too long on this because I know we want to take other questions, but the fact is that the states have taken a pretty big fiscal load here. And if we think of the states, what are we thinking of? We're thinking of public health, public hospitals, public schools, public transport, the justice system, and not much else. That they have a lot of other things, but that's the stuff they spend their money on. There's a little bit of welfare function as well. And look, those functions, they're the things which have held us together for the last few weeks and months. Not just them, plenty of people in the private and other sectors as well. But, it's these people and these services, these institutions, which hold us together. And I think Australia's done very well having states. I actually think the model of leadership that we've seen in the last few weeks has benefited enormously from the fact that we've had states. And the states are going to have a continuing role. Now, we're giving a significant shift from the Commonwealth's balance sheet to business, a significant shift direct into some households. I feel that we're going to have to make a shift into the states as well. I don't think we can follow this with fiscal austerity being imposed on the states, analogous to what happened to the local government sector in the UK in the last decade. I don't think that's going to be the way to respond, particularly because we could yet call upon these same people and these same services a second or a third time yet. We don't know. We simply don't know, other than that it's extremely likely that at some point we will. And so I really do feel that the Commonwealth and the states need to now start talking about their financial position. They probably are, but I don't think that that's a sector that could be left unaffected by the Commonwealth's response. The Commonwealth is the one with the borrowing power. The Commonwealth is the one with the predominance of the taxing power. So it's important that I think that we don't follow this through with a serious fiscal stress at the state level. There's a whole lot of options, but which I won't go into, but I just want to say that that sector needs to be remembered amongst the sectors that are facing the costs of this significant shock to the Australian economy.
Yeah, so if I can, so if I sort of extend some of your comments earlier, Greg, you sort of talked about the fact that we've seen, huge fiscal stimulus that's been targeted at the business sector and households. We've also seen some measures that have been directed at certain sectors. So, for instance, top-up payments in the aged care sector, recognising the additional costs that the crisis has had on that sector as just one example. And so I think, the extension of your argument then is, as we think about where all of these costs are being borne and how significant they are, that it's really important that we don't lose sight that the state government sector has also borne an exceptionally high burden there, and that we need to be realistic about the capacity to sustain that and what the best way is to deal with that. Miranda, did you want to add something on that?
to add that when we say the state sector's borne that, of course that means that's us, right? I mean, that's us as taxpayers in Australia, both through the federal tax system, predominantly, in fact, through the federal tax system, and then at the state level. And so this is why I say that we have to the federal government has to lead this. And if we were to think about tax reform, for example, I really can't see state governments, or we didn't see it, when times were good, state governments being willing to take the risks, the revenue hit, the risks associated with a tax reform, especially one that would support economic growth, without there being a renewed intergovernmental agreement with the federal government in terms of sharing the federal tax base, and without seeing some reform of that tax base as well. And just, I know we want to go to questions. In terms of the size of the response, I mean, JobKeeper really is enormously expensive. JobSeeker is a bit more efficient, but is not very well designed for the long term. And I think there probably is, there is some work that could be done to come up with a better transfer payment, negative income tax style model potentially. You'd need to do some modelling about level that would be much more efficient from a fiscal perspective, that is cheaper, but would also perform that macro reassurance risk management role for the broad population in terms of their household incomes over the next 2-3 years. So I hope the Treasury, when they can take breath, is actually thinking about how they might potentially redesign. I mean, I think JobKeeper itself is really unsustainable. So then how might we redesign JobSeeker in a way that is more efficient and fairer, and so it still helps sustain those household incomes?
Yeah, I think that's a question that anyone who's has an interest in policy for the next little while is going to be focused on, as unemployment reaches levels that we haven't seen for a long, long time, and how we manage the transition of that and think about that, both in terms of the social consequences, but also what it means in terms of, to Greg's earlier point, our sort of economic potential and the functioning of our economy. I'm going to go to some of the questions now, and then also just pick up a bit on some of the commentary coming from the Treasurer's statements at the Press Club, which we can use to sort of frame the conversation a little bit more as well. Let me start. I'm going to try to amalgamate a number of different questions that are sort of coming up, and I suspect both of you will say this isn't your area of expertise, but nonetheless, here it is. There's a couple of questions from Rob, Tom and John that I think essentially go to something that, Miranda, you were talking about a little bit earlier, but sits beneath this conversation and is vexed, but which is this uncertainty about what next in the health evolution of this crisis, and the uncertainty that creates, and how should we be thinking about the health and economic trade-offs from here on in. And so it's a vexed question, but the audience is interested in your perspectives on this, because even one of the questions goes directly to, do you think the open letter from the 265 economists, which goes right to the heart of this issue, do you agree with it, do you not? So this is still on people's minds very much.
I guess I know economists are all about trade-offs, but I do think that there is a way that you can think about the economic dilemma, which is a kind of utilitarian for the greatest good way, while still taking very strict measures to control the pandemic, which is what we're doing, right, with this short-term economic cost and fiscal cost. Look, it actually seems to me, although people feel like times are tough, and I understand that is really the case economically for people right now, I want to reiterate that I think that we are lucky so far in our successful response and in our health response, and that this is what government is for, is to manage that risk over periods of time, short term and longer term, together with the market. And so I would say that I'm impressed with our decentralised governmental decision making, and then brought together through the National Cabinet, And I personally think it's the right response, but also I think we can actually manage the economic risk for people. That is what we're trying to do. And in other countries where we're seeing more, revolution or unhappiness, I won't name which countries, it's partly because their governments are failing to address that economic risk that households are really facing. So I don't see it as a trade-off. I actually do see this pandemic response as being an investment in the health of the population, and that will sustain the economy in the longer term. And government has a role of smoothing, if you like, that process.
Greg, anything to add?
I take confidence from the experience of Korea more than probably anyone else. That it's possible, I think, to craft more carefully what we do through social distancing and what we do through test and trace. So the Koreans are not at the point where they've eliminated new cases. I personally think that we may never be at that point, but we hopefully can shift to a successful strategy of containment without complete lockdown. I think we already avoided the most extreme forms of lockdown in any event by moving quickly. I think we now need to move fairly quickly, though, on the economic front as well, because there are costs, significant costs. I don't mean financial costs, I mean human costs of not moving quickly on this front. And we have to make sure, though, that we don't lose control of the numbers again. Obviously, that's critical. So I actually think the government's doing a reasonably good job. The collective decision-making of the governments that we have is doing a reasonably good job of pushing along that transition and making sure that we have the investments in place to make the alternative strategy of test and trace work.
Yeah, and I think it's probably worth acknowledging too that, I know today the conversation was looking at the response of Australia and New Zealand, and the fact that even though we've been pretty firm in terms of social distancing and isolation, that we still have had economic activity and sectors, if you like, that have been open, and that we've benefited from that. And so I think that sort of is a bit of a pointer to the sort of balance that makes sense, and I think that people are looking for. One of the comments that the Treasurer has made at the Press Club is actually acknowledging that debt will be substantial, but that the burden of that shouldn't be borne through higher tax, is my summation of it. And so he's sort of pointing to the importance of harvesting, reform opportunities and options for Australia. Greg, would you like to opine on what you think might be important in that agenda? And you might actually just like to go back and perhaps put a bit more detail around your comments around what you describe as the phasing of this and how we think about that.
Well, look, I think, Australia begins this situation with relatively low net debt and relatively low gross debt. And we are obviously moving now to a position where we'll have much higher level of debt. There is uncertainty at the moment about the extent to which that will, in fact, the deficits will in fact be funded by formally by debt, or whether they'll be funded by financing instruments, monetary financing. But leaving aside that choice, which I think is probably being reasonably well managed, we will shift to a higher stock of debt. We need the numbers to know exactly where that'll pan out, but at the moment, that's clearly where we're heading. And so we've been there before, and it's, for example, after the Second World War, I think we were at the point where net debt was probably 5 times at least higher than it is now as a share of GDP. And we grew out of that. Some of it was we inflated out of that, but we did not seek to tax our way out of that. And that's, I think, the key point. I agree totally with the government that we don't want to tax our way out of this. But realistically, we will only be able to get away with that in a healthy way if we can get a growth economy that basically grows faster than the interest rate on that stock of debt. If that happens, then the ratio will just gradually wither away. And it's important that we get the sequencing right, because if you chase after some of these policies too quickly, you can frighten the horses and literally do more damage than good. I just want to mention how we came through the eras of the 80s and 90s. Although they were much smaller crises than this one, the pattern was pretty clear. The first reaction was a crisis response. The second reaction was a period of fiscal stimulus. And the third reaction was the economic reform. That's an interesting sequence, isn't it? Because basically, the tax reforms, for example, of the 80s came in the middle and late 80s, not at the beginning, after the early recession in the early 80s. The tax reforms in the 90s came nearly a decade after the 1991 recession. Then we had the GFC. We had the fiscal response. We had the crisis response. Then we had the fiscal response. We got to 2014, 2015, 2016. We're supposed to then have the economic policy reform response. But we didn't. The third example didn't get the third stanza. So we lost that opportunity because we lost leadership. We lost our political bearings. We can't suddenly go back to that. We can't go back to that just because we realise we got it wrong. We now have to realise where we are in the cycle and manage this first as a macroeconomic question and then second as a microeconomic question. So I agree with, yes, let's do a few things. Let's do what we can, but make sure that the focus first is on getting aggregate demand back as close as we can to our economic potential. That's first, and that'll take 2 or 3 years, I fear. Thanks,
Greg. Miranda, I'm going to throw an additional question or slant in just to pick up on some of the questions that are coming through our pigeonhole from the audience. There are a couple of questions in here sort of picking back up on this JobKeeper, job seeker. I think asking questions around, is it clear that JobKeeper will go, when will it go, and about the transition, how we go from having it to not having it at all and what that looks like. And a question from Andrew around the transition on job seeker, New Start. Do we go back to where it was? How do we think about those transitions? And then I guess there's some parallels here around some of the other arrangements that have shifted so suddenly in terms of expectations between landlords and their occupants, and how we reset some of those relationships. Interested in your thoughts on that, and of course feel free to toss in anything on reform more broadly.
Look, I mean, it's very challenging actually for the government, I think, to move. I guess one advantage for them in terms of JobKeeper, responding to that, is that it's such a kind of surprising, in some ways, like self-contained response. A kind of unique response, I think, in some ways. I mean, it's tremendously expensive, but clearly it's unsustainable, right? So in some ways it's not so bad perhaps to have that as an emergency response, because clearly you then have to move on to something else. And I mean, if you were to add it up, $1,500 per worker, if that was to go for a year, you're paying $70,000 a year to subsidise per person, right? I mean, in New Start in the old days was 14,000. So if people could sort of understand the scale there. So transitioning is going to be hard. You can't, I think for job seeker, you also can't go back. You just can't just go back. I mean, I really hope we don't just go back to what was there before. It was clearly inadequate before, and now it's even more inadequate, although maybe rents are going to come down, so that might help. But I wonder if there is some way for the government to craft a modification that is an extension or a reconstruction of job seeker that can apply to the people coming off JobKeeper to kind of capture that population. But the messaging is very difficult, right? Because it's not a full wage replacement necessarily. It's a survival income as we transition into hopefully more jobs, right? And more capacity there. So I really don't have an answer on that, but I think the government has to construct something, or perhaps it can transition down the level of subsidy to businesses in JobKeeper and transition away in job seeker to a more stable and more general payment. I'm sorry, I've forgotten the rest of your questions. No, it's so interesting, that one.
No, that's fine. I think we're reflecting. I was giving you the opportunity to say anything else you wanted about reform, but I'll just toss in my 2 cents worth around some of the observations Greg made around how we sequence these reforms and we think about that. I mean, there's obviously plenty of examples, not just in Australia's history, but around the world, of countries that have got this right and wrong. The US grew itself out of a debt problem in the 90s that everyone thought was going to be insurmountable. On the reverse side, Japan squashed an early recovery, I don't know how many recoveries ago, by increasing taxes too quickly on the belief that recovery had been substantiated. And similarly, Greg, to your point about the potential disruption and loss of political support for microeconomic reforms that are pursued too early in a recovery phase. And, I think that was a big lesson when you have a look at what happened in Indonesia after the Asian financial crisis, where as part of the IMF package, they progressed a really aggressive microeconomic reform agenda, which ended up losing, had no community support and was highly, highly disruptive. So there are plenty of examples, I think, that sort of add weight to that really clear message that you delivered. One of the other issues that's coming up, not surprisingly, also very topical at the moment, this just-in-time supply logistics chain that we've developed, and the conversation around our reliance on the supply of goods from China has, of course, come up throughout this crisis. And we've got a question from Emma around whether we need to rethink that whole supply chain equation, but also a broader question from Scott around, how we balance that in the context of economic efficiency, productivity, and those broader sort of objectives that we have pursued through reforms in the past. Who wants to pick up that hot potato? Greg, you're leaning into that one straight up.
Oh, thanks very much. Look, I very much believe that Australia benefits from global international trade, and it very much benefits from a multilateral view of the world. I actually think that it's not just to Australia's benefit. I think in the long run, we are one people, we are one species. We really do need to think internationally as one people. And in the long run, that's the best way to go. But obviously, there can be shocks and disruptions, and it's important when there are shocks and disruptions that we've got a plan B, that we've got something ready for the things that are most urgent. And I don't think we would want to be again in the position that we were in, where we did not reliably have enough PPE for our frontline health workers. And there are a number of other threats and risks like that I think we do have to much more carefully manage than we have. And to some extent, the strategy that has been taken, which is a very strongly aggressive shut down the economy strategy, was made necessary by the fact that we did not have an adequate plan for those types of things for our health system. So we didn't most importantly, have the ability to test en masse right from the start. And if you don't have the materials to do those things, then you're forced into these more costly alternatives. So this is a classic set of trade-offs that we have to manage through. And I think that we should, as a country, work out what we can and what we can't do on that front and what our plan Bs are. But that should be on a foundation of international trade, because I think that Australia, it's a relatively small country. We can't do everything ourselves. Ironically, because China is actually coming out of this more quickly than anyone else, our close relationship with China probably means that we will be in a better position to continue to use trading relationships to secure the things we need in the period of recovery that we're coming to. And we should take a positive view of that. But the great danger for us, of course, is this global rivalry, this global closing down and shooting each other in the foot that's going on. And that, to me, is much greater danger than anything else at the present time. So I think there's some supply issues, particularly for crises, for shocks, but in the main, we have to continue our trading model. However, we have put all of our eggs in two baskets: primary industry and tertiary industry. We've done very, very poorly in secondary industry and in the quaternary industry, which is the creative industries, the information, knowledge and creative industries. And there is a serious question that Australia needs to address also about whether or not putting so many of our eggs in so few baskets is in fact our best strategy. There may be very much a need for us to also look at some of our approaches to the two sectors which have been in decline or have been moribund in the Australian economy if we're to participate fully in a 21st century world.
I think that point about it's been picked up previously, around economic dynamism in Australia, and whether we've got the economic complexity as one conversation that sort of captures that. I think, Miranda, your thoughts on that?
I think the supply chain question is just one example of what we would call resilience planning. So system resilience requires some redundancy in the system, which of course works directly against optimal, efficient, optimal just-in-time approaches to anything, not just supply chains, but other things. So it's good to see, the government's agreed finally to stockpile fuel to the level that people think is an adequate global minimum. Coincidentally, I suppose, with the current crisis. And perhaps there are some things that should be done in health and food and so on as well to support particular risks in future. This is the resilience point, and I'm conscious of your time, but the resilience point as well does go to our tax system. So one of the issues I think with state government fiscal risk that they face is that they don't really have anywhere to go in terms of their current system. They're going to lose revenues on stamp duty, property prices are going to go down. Gambling's not producing currently unless we reopen Crown Casino soon in Victoria, and most of their revenues are down. The other taxes they have in the system, payroll tax possibly should be changed, are not adequate to deliver revenue. So that's why reform is needed. So that element of our sort of federal state taxes system is not resilient enough to future shocks. So that would be an argument for planning some reforms, again, with federal leadership.
Thanks for that. Now, we're pretty close to the end time, but I'm hoping I can just prey on the audience's tolerance just a little bit, because I'm just going to run a few minutes over, because I've got one more question I'd like to ask each of you. And then just to the audience as well, if you still have some questions, please feel free to put them in through the Pigeonhole link, because we will actually try to answer those questions for you, and we'll do that through our post-event email We'll send you a link to the live stream so you can watch it again or forward it on if you want, but also we'll put some answers to some of the questions that we haven't been able to get to there. So if you still have questions, please feed them in through the link, and we'll do our best. We'll either make Miranda and Greg sing for more of their supper or the smart team at CEDA can have a crack at those as well. But just as a final question to each of you, we talked right at the outset about the degree of uncertainty. There's obviously still heightened uncertainty about the health outlook and how this the virus itself evolves. And then I think we're in a brave new world and trying to understand what the economic impacts are. In that environment, what are the one or two things that you will be watching to try to get a better handle on what you think the future is looking like? Greg, perhaps question on notice, but perhaps starting with you if you don't mind. And that's a question from one of our participants, so you can't blame me for the curly last one.
Okay. Well, look, I'm not entirely sure that I want to suddenly become a forecaster of the future or a better forecaster of the future. I kind of worked out, I've been in public policy for 45 years, and I kind of worked out a long time ago that it's actually better to have good decision rules and good institutions and good practices and good processes, far more important than being able to forecast accurately and so be ready to make that change just because you're very clever at forecasting. I don't believe in that way of doing economic or social policy. I think what we have to do is strengthen our institutions, look again at some of our governance, start rethinking what we've learned from this experience. There's a whole host of these things, and be clever and build these things carefully. A part of that will be to abolish rather phony distinctions between the public sector and the private sector, which we see always being put up as some sort of contest, but in fact, it's a collaboration that we really are needing, just as we are going to be needing a collaboration between Commonwealth and states, between business and labour. We're going to be needing this institutional response to make us robust against whatever comes, rather than clever at predicting what it will be.
That was going to be my move, the move to talking about institutions. But I guess in terms of indicators, you know, one of the reasons I want a pre-budget statement, you know, I want that May or June statement. Now I'm a little confused, actually, I have to say, as to when exactly we are going to get the statement with some detail in it. And then I want that budget. I am interested in tax data. You know, what are the taxes that we're collecting? There's always a lag in taxes. So, you know, most of the year has gone. It might have been all right. We had the bushfires, which we thought were going to be the worst thing ever. And then, you know, a month later, we have COVID-19. So I'll be looking at the tax data and, of course, also at the size of the cash transfer response. I think the other thing I would be looking at, as to make me more or less worried looking forward, is actually at the way that our political engagement, for example, between business and government, is going. Like, how is that conversation going? I would hate to see you know, a view that sort of said that somehow it's not in the private sector's interest to actually shore up and protect sort of the nation more broadly. I think it's in individual households' self-interest. It's in my personal interest that people with low incomes, without jobs, with poor health are actually, you know, it's in my interest to look after those people. So I'll be looking for that debate. And if we can see some divisions there, or that's not going well, I think that we're going to face some challenges.
Well, I think that's a pretty good way to finish off, actually, and it won't surprise either of you, or hopefully the audience, to know that for me, I think the quality of the conversation and greater transparency and openness about what the outcomes have been and the outcomes that we're actually looking to achieve in the future, and whether we're heading in the right direction, is going to be critical, and we'll be looking to foster as many of those conversations through our research and work as we possibly can. Thank you both for your time today. Fantastic conversation and great insights. Thank you again to the audience for participating. Remember, if you've got more questions, please send those in through the Pigeonhole link. We do have plenty of other content and information on our website, CEDA.com.au. In particular, for instance, if you are interested in thoughts around the future relationship with China, we had a great conversation on that topic not long ago, and that live stream is available on our website, and lots of blogs and podcasts addressing just an incredible diversity of issues that are relevant for all the issues that we're confronting right now. And then finally, before we go, just a plug for next week's live stream on the really important issue of mental health. We have the Honourable Julia Gillard, former Prime Minister, who will be speaking to us about that issue. So another great topic, and hope to see many of you signing up for that live stream. Thanks again to Greg and Miranda, and thank you all very much. Have a good afternoon.